Good morning and welcome to IG's early morning call. I'm Angela Barnes. Well, we've got a lot coming up on today's show, including we take a look at the Seng as the rebound continues. And that's as China asks large exchanges to avoid selling onshore shares and cut the stamp duty on stock trades in half. We've also got retail prices, well, they called in the UK at the slowest pace in nearly a year, offering some respite for inflation. And although earnings season is winding down, results from Best Buy and HP could add some volatility to the mix. So we've got all of that coming up. But firstly, let's have a look at what's happening in volatility because, well, let's take a look. The VIX is down this morning marginally, 0.12% at about 16.75. Well, since Friday, the 18th of August, it has steadily declined. With 30 minutes to go, though, until the European markets open. This is how the pre-market as well is looking across Europe. If we pull up the FTSE 100, and we can see it's set for a higher open, 0.39% higher. It says here on the IG platform. And you can see, well, it was a bank holiday in the UK on Monday, but you can see last week it steadily gained, but is down on the month about 4%. And if we turn to Germany's DAX as well, also expected to marginally gain this morning. It is also down about 4.5% since the start of the month. And also France's CAC 40 as well, also expected to open marginally higher. Well, 0.36%. The market is anticipating, but it's gradually gained since the 18th of August, but is also down on the month by about 2.5%. Well, overnight in Asia, interestingly, China indices continue to rise. This morning on Sunday, after the Chinese finance minister announced they were cutting by half the stamp duty on stock trading. Now, if we look at the Hong Kong, the Hang Seng, if you can see here, it's steadily gained since Tuesday. It has steadily gained since Tuesday there. You can see the 18th of August up nearly 3% since that announcement as well on Sunday. And if we turn to Japan's Nikkei as well, that also up marginally. And Australia's ASX 200 also slightly higher. Well, after 17 months of suspension, Evergrande is trading again. The stock fell 79% yesterday and lost more ground overnight. It's at the center of a string of debt defaults since late 2021, and its stock has been suspended for 17 months. Well, Evergrande is still in the process of getting approvals for its debt restructuring plan. And in Japan, well, Toyota is suspending operations at all of its assembly plants due to a problem with its production system. The automaker has already halted 12 of its 14 plants in the country, and the last two will stop all activity this afternoon. According to Reuters, the 14 plants in Japan account for around a third of Toyota's global production. Well, let's go to the US now and Wall Street, because stocks finished for a second consecutive trading session higher, and that's as risk-off sentiment subsided following Fed Chair Jerome Powell's speech at the Jackson Hole Symposium last week, in which he signaled higher for longer interest rates. Well, if we look at the US 500, the S&P is expected to open higher again today, and also as well the NASDAQ, we expect the tech savvy, there we go. There we are. The NASDAQ as well, US Tech 100, also set for a higher open, also gaining since Friday. And the Dow Wall Street also expected to gain too. So we'll be keeping across all of that as well. And our Beat the Street show this afternoon, our pre-Wall Street program. And so do tune in for that as well. But moving on as well, elsewhere, Japan's unemployment rate unexpectedly increased to 2.7% in July. And that was from 2.5% in June, defying market forecasts for no change. And this was the highest jobless rate in 4 months. Meanwhile, in the UK, well, prices in British store chains rose in August at the slowest pace in nearly a year, according to industry data. That offers further relief for consumers hit by high inflation, of course, and for the Bank of England, which is trying to quash it. The British Retail Consortium said annual shop price inflation cooled to 6.9% in August, its lowest since October 2022, weakening from 7.6% in July. Meanwhile, food price inflation fell to 11.5% from July's 13.4%, driven by a slower increase for meat, potatoes, and some cooking oils, while non-food inflation held at 4.7%. Well, however, inflation does remain stubbornly high, more than 3 times the Bank of England's target, and investors expect a 15th back-to-back increase in interest rates to 5.5% from 5.25% on the 21st of September, after the Monetary Policy Committee's next scheduled meeting, which we will, of course, be keeping across. Now, moving on, in Germany, the GfK consumer confidence unexpectedly fell to minus 25.5 in September. Economists had anticipated a small increase from the 24.6 recorded last month. Now, over in the US, and the markets await the S&P case-shiller home prices at 2 p.m. expected to rise by 0.6% in June. And at 3 p.m. we will also have JOLTS job openings forecast to fall for a third month in a row to just under 9.5 million, and this would be the lowest level of openings since May 2021. Also at 3 p.m, Conference Board consumer confidence seen at 116 in August, 1 notch lower than in July. Now, also today, we're also going to be watching out for the Bunzl share at the market open. The business supplies distributor raises its annual adjusted operating profit forecast on the back of lower operating costs and as acquisitions pay off. Now, we've also got the markets are also awaiting a few other important corporate reports too today, starting with Best Buy at lunchtime. The electronics retailer hasn't had the best time recently. It's had to deal with too much inventory, which had a negative effect on its profits and margins. In the second quarter, Best Buy earnings are forecast at $1.07 per share, to be compared to the $1.54 recorded the same quarter a year ago. Revenue should reach $9.52 billion. Now, if we just pull up the Best Buy chart on the IG platform, it is an all-session stock. Well, any positive news on the level of stock could support the share price, of course. And since the 25th of July, its shares are down, though, about 15%. And on the year are actually down nearly 9% so far this year, roughly. Well, moving on as well, HP. Inventories is also a concern for the company, due to report tonight after the close of the US market. The PC and printer maker is seen posting earnings of 86 cents per share, down 17% on the same quarter last year. Revenue is also expected to fall by 8.5% to $13.38 billion. Well, if we look at the HP price chart, shares have been on a slow but steady rise since October last year and hit a 52-week high in July, when a Gartner survey said that a gradual increase in demand contributed to an inventory reduction in the sector. Well, the stock is also all sessions on the IG platform. You can see it's trading higher today at 1.62%. Now, moving on to HPE as well. As for Hewlett Packard Enterprise, otherwise known as, it will also report tonight after the bell. The enterprise level hardware and software maker is forecast to post earnings of 47 cents per share, on cent lower than the same quarter a year ago. 1 cent lower than the same quarter a year ago. Investors will be particularly attentive to the group's performance in the new hot AI sector. Of course, in Q1, the AI segment accounted for 3.8 percentage points of a 12.2% net revenue increase. In Q2, it contributed 1.9 percentage points to 8.1% revenue rise. Well, in Q3, revenue is seen rising by by 0.7% year on year to just under $7 billion. Well, the pace of revenue growth is not a new problem, though. It is mainly due to a decline of the hardware side of the business, and investors want to see AI as a new growing source of revenue for the company. So we will be keeping across that. Now to oil. If I just pull up my Brent and WTI price chart, let's just have a quick look here. Well, Brent, if we just have a quick overview here. Well, both US and Brent are actually lower today, down about zero. Brent down 0.25% and US crude down 0.31%. I'll just quickly bring up the US crude oil price chart for you here. You can see since the 28th of June, that dip there, it rose and then suddenly steadily declined again. And of course, China demand concerns have been weighing on the minds of investors, and that's sort of balancing as well against the supply concerns with cuts from Saudi Arabia and OPEC as well, still also weighing on the minds of investors. And then moving on as well in precious metals, let's just check the price of gold for you today. And the price of gold also marginally higher again too, as the US dollar and bond yields retreat, and copper also trading higher today. Well, that's all we've got time for in our early morning call, but do tune in again for the rest of the day. We'll have Beat the Street, we'll have the look ahead. Do subscribe to the IG, YouTube channels so that you don't miss any of those. And thank you very much for watching, and we'll see you again later this afternoon.